What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And today we had yet again another red day all across the board when it comes to the indices. Russell 2000 went down today 1.45%. Nasdaq went down 2.28%. Dow Jones went down 0.19%. And the S&P 500 went down 1.22%. We had a decent attempt of the indices, the major indices, S&P, Nasdaq, not that much Russell 2000, but at some point today, near 3 p.m., the Dow Jones jumped into positive territory. Nasdaq was down 0.90%. S&P 500 actually also entered into positive territory at 3 p.m., 3:10 p.m. Eastern Standard Time, an hour or give or take before the closing bell rang. But at the end, we ended up pulling back. It was very unlikely, guys, to have a green day when we are just 24 or 22 hours away from the Federal Open Market Committee that is going to take place tomorrow. Oil went up 2.44%, and actually the best performing sector today was energy. So what could be potentially happening tomorrow with the Federal Open Market Committee? My opinion, I could be mistaken. Obviously, I've been mistaken before, but I think that we are not going to have a very hawkish Federal Reserve. The Fed is going to say at 2 p.m. we're going to have, keep in mind that at 2 p.m. we're going to have the Federal Reserve decision about the interest rate. Nothing is going to change. Obviously, the Fed isn't going to announce any interest rate hike tomorrow. The markets are pricing in, are assuming that the first interest rate hike is going to be carried out in March. We have a 98% likelihood. So what the markets are going to be paying attention tomorrow is going to be to the narrative of the Federal Reserve, and most importantly to the narrative of Mr. Jerome Powell, because he's going to carry out a press conference at 2:30 p.m. or something like that, 3 p.m. the latest, right? So if Mr. Powell sounds dovish, or if he doesn't sound very hawkish, I think that is going to be welcomed by the markets, because as of now, guys, at this point, we have priced in so much bad news that I actually believe that even if we happen to have the worst case scenario, if Mr. Jerome Powell says that, that they are considering raising interest rate hikes 4 times this year at 0.25%, which that would be a very let's say, hawkish scenario, I think that the markets are going to remain positive, because the markets hate uncertainty. That's the thing that the markets hate the most, and we need certainty from the Federal Reserve. And as of now, we have priced in a lot of bad news. Take into account, guys, that the S&P 500 has gone down 9 out of the 10 last trading sessions. So the markets have been under pressure mainly because of the uncertainty that finally is going to be figured out tomorrow after 2 p.m. So let's see what happens. And I am not calling out a bottom at 42.22 in the S&P 500, but I think that we have already priced in a lot of bad news, and maybe the certainty that the Fed could provide to the markets tomorrow is going to ease the wall of worry that we have as of now. If we take a look at the sectors of the markets, and as I said in the introduction of this video, energy went up. This was the leading sector today, going up 3.87%. Oil actually went up today 3%, and the financial sector went up today 0.44%. So we can make the case that 2 very important members of the inflation trade ended up going up, one day before the Federal Open Market Committee. That makes sense. The worst performing sector by far, guys, was the tech sector. It went down today 2.31%, mainly because of semiconductor, guys. So SMH, the ETF of semiconductor stocks, went down today almost 4%, a lot. And another industry that was under pressure today were home builders, which its ETF, ticker symbol XHB, went down today 1.72% on fears of mortgage rate hikes. So we had another red day in the markets, and everything could change tomorrow depending on whatever the Federal Reserve says and depending on the tone of Mr. Jerome Powell. When it comes to the advances and declines distribution of today's trading session, we had 3,000 stocks going up and 4,429 stocks going down. And before going over the indices, guys, I want to show you a couple of trades that I took today. I had a quiet day. I didn't want to force anything because we have the Federal Open Market Committee tomorrow. So I took a day trade on Shopify. If you guys remember, this was one of the stocks that I broke down in yesterday's video. Mind you guys, I left a lot of money on the table. It is what it is. But I just wanted to lock in the profit quickly, guys, because we are seeing a lot of volatility. The VIX went up today once again, something like 4%. So check this out. I purchased 15 shares at $853.76, paying $12,806, and I exited this trade. This was a 10 or 12 minute trade, guys, a very quick day trade. So I sold my 15 shares at $863.93, and I was paid $12,958. I ended up making over here $150, and I also sold a covered call of BABA, and I ended up being paid over here $700 and something, I think. Let me pull up here on the call. So I sold the $160 call that expires on December 16, and I was paid $790. So as you guys can see, I had a quiet day today. I guess that tomorrow I am going to be taking more trades relative to today's trading session. S&P 500 went down today 1.22%, and it closed today's trading session at 4,356 points. And as I said in yesterday's video, the main task for the bulls of the S&P is going to be reconquering this 200-day moving average, this red line that you guys can see over here, at around 44, guys, 4,444 points. Something that is worth pointing out here on the 4-hour chart is the fact that we are about to see the imminent unfolding of a death cross. You guys can see how this 50 SMA is about to cross below this 180 SMA on this 4-hour chart. So this is bearish, guys, no doubt about it. In terms of support, the most important line of defense for the bulls is going to be 43.50. 43.50 happens to be a former area of support back from early October, and also a former area of resistance back from early July. And mind you guys, at 43.50 we have some sort of psychological support, because 43.50 is the line between correction territory in the S&P 500 and non-correction territory. So I think that if the bulls fail at closing above 43.50, in 1 or 2 trading sessions, and on top of that, this death cross keeps on unfolding, this is going to be negative. So this might imply, in technical terms, because at the end of the day, everything depends on whatever Mr. Jerome Powell says tomorrow, this could imply that we have a first shot of revisiting the lows of yesterday's trading session at 42.20. So obviously, guys, the S&P 500 doesn't look good at all, and the bears are in absolute control of the main index of the United States stock market. Nasdaq 100 went down today 2.48%, and it closed today's trading session at 14,149 points. Let me check on something over here. So according to today's trading session, or according to the close of today's trading session, the Nasdaq is 15% of the highs, guys. This is no joke. We have the most important stocks, guys, in terms of market capitalization trading inside the Nasdaq 100, the most important stocks of the world. And yeah, this was a very decent haircut for the Nasdaq 100, no doubt about it. We can also make the case that here on the 4-hour chart, we can see the clear unfolding of a death cross. You guys can see how this 50 SMA already crossed below this 180 SMA on January 18. And since then, the Nasdaq 100 has dropped a lot. So we can make the case that this death cross already did its job, right? Okay, so what would be the most important task for the bulls of the Nasdaq 100? They really need to close tomorrow's trading session or any of the incoming trading sessions above 14,400 points. 14,400 points happens to be a former area of support back from early October and also an area of overhead resistance back from late June. And obviously, guys, needless to say, if tomorrow Mr. Jerome Powell happens to say that the Federal Reserve is going to do whatever it takes in order to control inflation, that if they have to raise interest rates 4 or 5 times this year, because inflation is getting out of control, then you can be pretty sure that we might see the Nasdaq 100 revisiting the lower pivot of yesterday's trading session at 13,753 points. So on both indices, guys, S&P 500 and the Nasdaq 100, the bears are in absolute control, no doubt about it. This could change tomorrow. I think that we are due for a legit relief rally, and the NDX is already down 15% of the highs, and it has gone down 15% in a matter of only 25 days. So we are in front of a very aggressive correction, no doubt about it. And speaking about tech, guys, let's go ahead and take a look at the earnings report of Microsoft. I haven't seen anything, guys. This is going to be live reaction. Let's see what is going on over here. Jeez, Microsoft is down a lot. By the way, this is very bad news for tomorrow's trading session for tech and the Nasdaq 100 and also the S&P 500 for that matter, because you guys know that Microsoft is a very important stock in terms of market cap on both S&P 500 and the Nasdaq 100. So we are not starting tomorrow's trading session on the right foot by any stretch of the imagination. So Microsoft went down today 2.66% and it closed today's trading session at $288.89. And as of now, it is trading after hours 6% of its closing price. So we are seeing a very decent haircut in the case of Microsoft. So did Microsoft miss on earnings? Let's see. So, okay, sales came in at $51.70 billion, beating the estimate of $50.88 billion, and EPS came in at $2.48, beating the estimate of $2.31. So Microsoft beat on earnings across the board, guys. So this drop has to be guidance related. So let's see if I can see over here anything guidance related, because that's the only explanation for this drop, guys. They did pretty well when it comes to EPS and revenue, and regardless, the stock is down a lot after hours. So do I have any guidance information over here? Let's see. No, I don't have anything guidance related, guys. So Q2 Intelligent Cloud revenue at 18.3 billion, in line with consensus. Microsoft Service and Azure, let's see, are trading lower after the company reported Q2 earnings results. Microsoft beat was not what the buy side wanted, says Jeffries. Take a look at this, guys. This Microsoft beat was not what the buy side wanted, says Jeffries. So I don't see anything guidance related to justify this drop of 6%. They beat on revenue and EPS. So this is for the most part, guys, a preamble of what should happen with Tesla tomorrow. Remember that Tesla is reporting earnings tomorrow after close and probably on Thursday with Apple. So the markets are being extremely, but extremely demanding with earnings report. This was a very decent earnings report, and Microsoft, I mean, I still need to take a deeper look. I probably would do it once I am done filming this video, but this is, I mean, I don't know what to say, guys. They beat on EPS and revenue. There's nothing negative when it comes to guidance, apparently. I didn't see anything negative, and Microsoft is down 6% after hours. So here on the 4-hour chart, we can see that the stock of this company is very oversold. We can see the RSI at 28 points. And Microsoft found support a few minutes ago at $267, which happens to be a former area of support back from late July. So if tomorrow tech happens to have a very tough day, an ugly day across the board, and if Microsoft happens to pay a visit to $269, $268, we can make the case. This is a possible scenario, guys, because we are seeing crazy stuff in the markets. So we can make the case that the RSI of Microsoft is going to be way lower, because Microsoft, as of now, is very oversold. It is in oversold territory with its RSI at 28 points. So we can make the case that if this were to happen, then the RSI of Microsoft is going to be way lower, and that is going to increase the likelihood for Microsoft to find support at a previous area of support back from late July, and then Microsoft could be potentially bouncing back up, in which case we could take a trade up to $274, which happens to be a former area of support back from also late July. So if we were able to take a trade from, let's say, $269-ish up to $274, we are looking at a 2% profit. But this is unbelievable, guys. I mean, they reported very solid earnings, and the stock is down not 1 or 2%, no, 6% after hours. So we are going to have fun with Tesla tomorrow, no doubt about it. And the second stock of this video is another stock that has gotten absolutely killed, guys. NIO. NIO went down today on no bad news at all. It went down 4.34%, and it closed today's trading session at $23.79. And I wonder, guys, you guys know that I am a long-term investor in NIO. I own 900 shares. My average price is at around $17, $16. I would say that I am out of danger, that I am not going to be out of the I am not going to be under the water. Who knows? We'll see what happens with this crazy market. So as of now, guys, NIO, the company that I believe firmly that is going to be the second player in China after Tesla when it comes to electric vehicles, is down 64% of the highs. And mind you, we haven't had any bad news. We actually got good news when it comes to Chinese stocks, because the Chinese government is going to lower interest rates. That is obviously good news, because the access to credit is going to be cheaper for all of the Chinese companies. And on that news, most of the Chinese stocks have been selling off. So I'm thinking, guys, and in my case, because I would like to keep on adding shares to my long-term position, I am a super NIO bull. I think that if NIO happens, I am going to pull up here, guys. I need to pull up the 3-year chart. So I'm thinking that if NIO keeps on going down, which seems to be the most likely scenario because this technical chart looks awful. So I'm thinking that NIO might find support at $21. $21 happens to be a former area of support back from October of 2020, and this is also a former area of resistance back from August of 2020. So that's an area, $21 to $20.50, in which I am going to be interested, no doubt about it, in order to pick up some shares of NIO. When it comes to taking a trade, I am going to be keeping a close watch on $25, guys. $25 is an area of overhead resistance in which NEO failed in yesterday's trading session. So I'm thinking that if NEO can take on $25, then the bulls might be able to fill the next gap up to $28. $28 happens to be a former area of support that acted as such on 3 occasions during this month of January. So if we were able to take a trade from, let's say, $25.50 or $26 up to $28, get this, guys, this is a 10% profit trade, nothing to sneeze at. And in the case of adding more shares to my long-term position near $21, take a look at the RSI of NEO. It is at 25 points, very but very low. So, and as I just said in the case of Microsoft, we can make the case that if NEO happens to pay a visit down to this area, $21-ish, in a very aggressive way, then the RSI of the stock of this company is going to be way lower, and that is going to increase the likelihood for the bulls of NEO to find support at a previous area of support and resistance and then bounce back up. And the third stock of this video is going to be Etsy, guys, another stock that has gotten absolutely killed. No mercy for Etsy, guys. So the stock of this company went down today 5.80%, and it closed today's trading session at $145.13. So as of now, the stock of this company, guys, is 50% of the highs. So in the case of Etsy, and obviously, guys, this is a very but very ugly looking chart, clear downtrend. We can see here a death cross that unfolded back on December 10th, and since this death cross unfolded, it hasn't been invalidated, so it is still, let's say, putting downwards pressure on Etsy. So this is a trade with which we have to be very careful. However, I'm thinking, guys, that if the Nasdaq 100 and tech in general terms happen to start to recover, then $154, which happens to be a former area of support back from mid-May, might be an interesting spot in order to start a breakout trade on Etsy. So I'm thinking that if the stock of this company or if the bulls of Etsy can take on $154, they might be able to fill the next gap up to $164, which happens to be a former area of support back from May and June of last year, that coincides on this 4-hour chart with this 50 SMA. So let's say that Etsy bursts above $154. Let's say that we pick up some shares at $155, $156, and if we are able to write them up to $164, we are looking at a 6% profit. So watch out for Etsy. I know, guys, this is a very ugly looking chart. This is a trade that that if we happen to take, we need to place a very tight stop loss, but who knows? This could also be an opportunity to take a momentum trade from $155-ish up to $164. And the last stock of this video is going to be Lucid Motors. And in the case of Lucid, I don't know what to do here, guys. I gotta be very honest. I don't know if buying puts, because this is also an ugly looking chart, or maybe buy calls. This is a tough one, guys. And since the VIX is above 30 points, guys, so most of the puts out there are very expensive. So you guys know that every single time that the VIX is under 20 points, then calls become expensive, and when the VIX is above 20 points, then put options become very expensive. And the VIX as of now is, what was the price that the VIX closed today's trading session at? 31 points. Extremely overextended. So, and way above 20 points or $20. So, puts are very expensive as of now, but I'm thinking, guys, that if Lucid fails at holding $35 as lower support, sorry, guys, I think that we have room down to $28, which is a very important area in technical terms for Lucid Motors. $28 happens to be a former area of resistance back from late September, late July, and lastly, early June of last year. So this would be a beautiful trade if we happen to buy put options of Lucid if the stock of this company is not able to hold $35 as lower support. However, what happens if Lucid starts to consolidate slightly above $35, guys? $35 has acted as lower support recently on 1, 2, 3, and 4 occasions. So this might also be a bullish trade. Because if Lucid keeps on consolidating slightly above $35, then that might be a sign that the bulls are gathering momentum in order to fill the next gap up to $41. $41 is a former area of resistance back from June 19 and also back from early June 19, guys. Back from January 20th and also back from early January. So from, let's say, $35.40 or $35 up to $42, we are looking at a 15% profit. So Lucid could go either way, guys. So I think that $35 is going to be very important. So Lucid breaks $35. This could be a short position. And if Lucid consolidates slightly above $35, then I think that the stock of this company is going to be able to fill the next gap up to $42 or $43 per share. And with Lucid Motors, I am going to wrap up this video. Thank you very much for your attention and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well, so no video tomorrow. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in a different way because we talk about the markets over here in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday once again, 3 or 4 hours after the market closes. Peace out.